Hey everybody, this is Jose Blasco here. This is a sound check before we start the session in 30 seconds. Can I have a quick hello, a quick confirmation of the chat box so I know you hear me well? You should see my screen as well. That's obvious on YouTube, but the sound, again, it'd be great to get confirmation from you guys. So 10 seconds to go. Very good. Almost there, everybody. Here we go. Top of the hour, time to get started. We are live, everybody. Thanks for confirming this. How are you, everyone? September 10, 2020. Today we are getting together to do a little bit of longer term trading. Longer term trading means anything above and beyond day trading or intraday trading. And therefore, we are looking at opportunities normally to be exploited with options, since options give us options, isn't it? So we're going to be looking at directional opportunities as well as non-directional opportunities. Look at a little bit of everything, especially given the pretty special conditions we have in the market in recent times, where we've got peaks of volatility which are pretty interesting, including today. The market is speeding up to the downside as we speak, since the market opened gapping up, and now it's below yesterday close. Okay, so we're going to be looking at all of these, and most importantly, trying to identify market opportunities that meet our rules, and then we will execute them. If we didn't find opportunities that meet our rules, then we will just keep switching market until we find opportunities that do meet the rules. But we are not going to improvise or execute a trade out of a fear of missing out or anything like that. We are just going to be religiously disciplined in our approach to trading. Okay. How are you, Mark? How are you, Leland? Everybody, how are you, my friends? It's very good to see you here. So before we get started, I want to highlight the disclaimer. So please make sure you read it carefully. No rush. Read it all. It's an important piece of information for you to read. Again, basically, during this session, we're going to be executing trades. This is for educational purposes, for instructional purposes, if you wish. Certainly, the opportunities are executable. So if I take the trade, you can certainly take the trade with me. But you taking the trade means that you decided to take the trade, and real money, paper money, larger size or smaller size, etc. All of those are your decisions. Okay. Now, having said that, for sure, ask questions, clarify your doubts, your different points of view you may have. Anytime we are putting a trade in place, you feel free to comment and work with us on that. Okay. Cool. So here we go. Trade station. Here we are. Okay. This is trade station, and the first thing I would like to do is to move around a little bit. First, I would like to show the S&P. Okay, so the S&P, as I was saying, hit a red UFO and falling down into the green UFOs below. So we may end up having a little bit of a ranging day, and if the market goes below 332 or something like that, then there is room. Lots of room for price to keep falling to other UFOs, okay? Especially given the fact that the climate would then, if price was to fall, the climate would likely reconfirm to be a down climate, where right now it's not confirmed. And on top of that, you have UFOs above and below. So we are likely going to see a little bit of ranging action, okay? But if we do pick up speed, especially to the downside, it could be intense, okay? So we're going to be ready to position ourselves for the different possibilities the market will offer us. Okay, looking at the VIX, the implied volatility of options on the S&P 500. So we are trading at levels of 29 at this moment in time. Okay, 29, hitting red UFO. So options prices are likely going to fall. If that was to be the case, typically you would see the market going up. So we kind of see a little bit of a confluence there, where the VIX is hitting a red UFO, where the S&P is hitting a green UFO. So again, if everything works according to plan, we should see the market bouncing back up, and then the VIX reaching the green UFO, and then vice versa, bouncing back down. And again, we are likely going to see some sideways action here. Okay, that's how it's really looking like. And if that was not to be the case, then I would say we are about to see violence. Okay, I think we're gonna see any of the two extremes, okay, or very, very quiet markets or very violent markets, depending on what the market will decide to do in the end, okay? So again, looking for opportunities in today's session where we can position ourselves in different ways so we can take advantage of those different scenarios and situations if possible. Hey, Duyan, how are you, my friend? Maranu, how are you as well? Good to see you all. Cool. So, what else? Opportunities to be reviewed. Okay, so let's begin with reviewing our trade with Nike. We've been discussing this trade for a long time. Okay, so if I zoom out, this is a failed trades that we entered with Nike a long, long time ago. That was back all the way on July 10, where we entered, pointing to the short side with an opportunity where we bought puts, expecting Nike to fall, and instead of falling, really what we saw with Nike is Nike going to the moon. What an incredible move in the opposite direction. Okay, I guess that during the COVID time, everybody started doing some running or some sports in general, and Nike is capitalizing very nicely of that. Okay, I'm not sure if that's the case. Probably a very bad joke, but you got my point. So anyway, I always point at this failed trade. Okay, not only because it's still running, but also because it's important that you keep in mind, especially if you are new to the channel, that the way we're going to deal with stocks is not by trading one stock at a time. What we do is we build a portfolio with multiple positions that we run in parallel, where some positions are pointing to the long side, some positions are pointing to the short sides, some positions are directional, some are non-directional. So we basically keep offsetting, I should say, one position against each other, taking advantage of time decay to offset the problem of time decay from the long opportunities, as well as positioning ourselves with positive gamma all the time. So when a market goes against us, like for example Nike, it means that the speed at which we are being hurt is decelerating thanks to the positive gamma, where the other trades that worked well during this time, that we have taken a bunch of trades, right, since July 10 until now, that we closed already. So those other trades that worked well had an accelerating speed of profitability thanks to the positive gamma too, right? And that way, basically, you have trades that offset each other. And of course, sometimes we'll have trades that go against us. But the beauty with options is that the most you can lose when you buy an option, in this case, it was a put. So the most you can lose when you buy a put is what you paid for the put. Okay, so even though the chart looks very dramatic in the sense that it went against us all the way, so what? The most you can lose is what you pay for the put, which was 400 over dollars, if I'm not mistaken, or 300 something. Let me open the management tab so we can go ahead and take a look at that. Very nice, Duyan. Okay, so just opening up Option Station Pro, looking at the Manage tab. Here we go. So Nike, okay, we paid 385. So the most we can lose for that put, okay, and you can see it here. Okay, so single put, October 16, 90 put. So we paid 385. So the most we can lose is that, no matter how much higher Nike goes. And now we got 36 days where if the market was to crash all the way, Nike would go back to profitability, and then we can close it for no pain. Unless that's not the case, and then the pain would be 385. And in parallel, again, the idea is that when you build a portfolio, you have multiple trades that run in parallel, okay? Multiple trades that run in parallel. Some are long, some are short, some are directional, some are non-directional. So here in the channel, we are meeting like 45 minutes a week. So that's how many positions I was able to put together in 45 minutes by meeting once a week. So we have another trade with SPG. That one is creating a little tiny bit of profitability. I'll comment on that later. But again, the one with Nike, I already commented, that went against us, even though we're going to leave it there just so we monitor and we learn from it, okay? If you guys are replicating what I'm teaching you in the sessions during the other days of the week, then your portfolio should be running multiple trades in parallel, which is the way to do it, okay? Now, the next trade I would like to review is FISV. This is a purely non-directional trade. This is a trade that we put in place. This is an iron condor. We put in place this iron condor on August 27. Okay, August 27. So we've been in this trade for a few days. The bet on this trade is to stay between 112 and 85 from now until October 16. As you can see, as of now, we are trading somewhere in the middle of the range, even though the market has been behaving crazy. You know, our UFOs are doing what they're supposed to do. The range is wide enough to absorb price movement. So as of now, things are working according to plan. Nothing else to add. Things are just normal for now. So a good one, okay? But again, we need to keep monitoring that, and it's still a long time to go from now until October 16 is over 1 month's time that we still need to wait for this trade to fully conclude. Okay, and by the way, I remember saying when I entered this trade that I did a very long-term iron condor on purpose. So as the trade progresses, I'll be adding more comments when it comes to trade management. The complete opposite of FISV is the trade with Moderna, which is a trade that concluded last Friday. And I remember commenting this last Thursday when we met, where I said this trade is very, very, very likely going to end up in a profit because last time we met, the price of this stock was here. Okay, and we simply need to survive one more day in the purple area to get to this vertical line representing September 4. That was last Friday, and we did, and therefore this trade ended up with a complete profit. Even though last Friday was crazy, the UFOs that were on the bottom part of the range that helped us set up 5886 as the bottom part, they did a very good job bringing price back up just to save us from what could have been a loss given the violence of the market on last Friday. That was really no joke. And this trade ended up with a full profit as a non-directional trade. Okay, so again, this trade is completely concluded. But again, since today I'm going to be looking at other opportunities of the same type. So hopefully you appreciate me reviewing this trade, which is already over, because when I plan new trades looking for the same type of scenario to profit from the same type of market movement, then you fully understand what I'm trying to do, especially if you are new to options trading, so then you can follow. Okay. What else do we have? We had a trade on now. Okay, this was a non-directional trade. Let me rephrase that. It was a neutral trade, so that was a neutral long trade. So that's a credit spread. That was a bull put spread. The bet in this case was that price would not go below 445. The trade was taken on 828. Okay, and price did go below 445. Okay, now what's the issue when that happens? Well, the issue when that happens is that it's not a good news. But the good news, though, is that when you do a spread, you sell a put and you buy a put below, and therefore the difference between strikes, that's the most you can lose. Okay, that's the most you can lose, and therefore, in this particular case, while price going below 445 means that you may lose, the amount of loss you would get is limited by the difference between strikes, by the distance between strikes. So it's okay. So what happened next? Well, by the way, all this, the fact that price went below 445 is because last Friday, even last Tuesday, both those days were really outside the norm in the sense of aggressivity and violence and speed of price movements. If not, price would not have done that. Okay, but since then, what just happened? A green UFO is showing up, and all of this is helping us to increase the probability for the stock to, come back to somewhere here in the middle. And as long as we are above 445 before 918, then this trade will end up as profitable. So we will end up monitoring. I would say it looks okay, especially given the fact that stats are 52%, which is quite high in the case of a stock. Putting on the side the violence of last Friday and last Tuesday, this trade is behaving as normal. And the last one I'm going to review before we start with planning new trades is the one with SPG, okay, which is another non-directional trade, as well another iron condor type where we can see the predefined range being 90 to 54. We are in this case also shooting for October 16. We started this trade on the 4th of September, and again, price is currently here. So again, looking good for now. Not much to comment really. We just need more time to pass, more price movement to happen, and it does look good for this stock to remain in the purple area as per plan with the UFOs and the statistics that we run. Okay, cool. So all of this is some of the exercises that we have done before. Hopefully, these reviews are helpful to get you to fully understand what we're doing. And now this is when I switch mode and I move from review to looking for new trades for the day. Okay, so let's begin. How are you, Fairmont? Good to see you. Good to see everybody, guys. Cool. So let's begin. Okay, we're going to start with non-directional trades. Again, volatility is high in the market, so it's a good place where to start. And by the way, the last comment about review, the SPG trade, okay, which is currently making $1.50, which, by the way, I did this trade using market price, which is a much worse price than what you would get in a normal case. Okay, so if I was to look I believe at the premium we had available when we did this trade, it was, did I document it? No, I did not document it. Okay, so yeah, so forget about it. But it was more. It was more. This trade has got 76 cents of $76 of premium. It actually, the available premium in the market was more than that. If I remember correctly, I think it was $90. Okay, but I did this trade at market, which is when I did it. I remember I telling you this is what you never want to do. Okay, and I did it just to demonstrate how it would be. Okay, and still, so this trade is now showing $1 of profit, and that is just done just because time has passed. Okay, since we did this trade, it was September 4. It's 6 days after. Those 6 days of time decay are producing $1 of profit. In my case, if you had done the trade with 90 cents, it would be like $16 of profit out of 76, which is the premium collected. Okay, so we're gonna attempt to replicate these type of scenarios, and I'm gonna start with Beyond Meat. Okay, notice how I sorted my stocks, the stocks I got from the non-directional scanner. Okay, I sorted them from the higher price above and the lesser price below. Okay, and notice how we did an Iron Condor before that was profitable. Okay, with Beyond Meat, that was end of July. So why don't we, do it again? Okay, so let's see if there is an opportunity for us to do another trade like that with Beyond Meat. Let's see if we're gonna find the opportunity to do that. Okay, right now it's not looking good because I only got 45%. Okay, and that is not acceptable. We need at least 48%. So I'm gonna switch to pre and post market to see if it's better, and it is better. Now we got 50%. 50% is more than 48%. So we are okay, when it comes to continuing planning this trade. Now, having said that, if I shrink my chart as I'm doing, you can see plenty of green UFOs below, but only one red UFO above. And if I was to look at a monthly time frame, notice how this chart is actually, actually it's not. I thought it was making all times high. No, I got confused with another market. So, okay, so then I guess I'm gonna have to load data all the way starting, let's call it July 19. Okay, so let's go ahead and go back to the 55-minute time frame, and I'm gonna load data starting on first date, July 2019, and see if we got more red UFOs above. Because if we don't have more red UFOs above, then we cannot do a trade. Okay. Yes, so we have more UFOs above, so that's good for us to continue planning this trade. Okay, so now that I know I got more UFOs above and I got UFOs below too, and probabilities are 48 or above, in this case 51%, so I'm good to begin planning this potential trade with Beyond Meat. Okay, whoop. I didn't type it right, now I did. Okay, Beyond Meat. So let's go ahead and take a look at the option chain, and before that, of course, I'm going to have to look at earnings reports. Okay, so when it comes to earnings reports, okay, notice how the next earnings date for Beyond Meat is going to happen on October 26 at 4 p.m. Eastern time. So October 26, today it's September 10. This is allowing us, a long time to expiration. Okay, Mark, you got 1.02 live with the SPG on Iron Condor on the SPG Iron Condor. Very nice, Mark. Very nice. Much better than 76, isn't it? So I in my mind it was 90, but I guess I didn't remember this correctly. Thanks for that, Mark. So October 26, okay, that's the next earnings date for this particular stock, and therefore, really, when looking at available expiration dates, we can use anything. Of course, the shorter, the better. Since the efficiency of time decay is better and we remove ourselves from risk sooner as well. So let's go ahead and try with September 18 first, and if it doesn't work, we'll go to the next expiration date and the next, all the way to wherever it is needed without surpassing October 26. So I'm going to analyze and sell an Iron Condor, and notice how it shows here on the bottom part of my screen. And right now, before I get into strikes, okay, ignore the strikes. Just keep in mind that we selected September 18, and notice how I have changed my price slices to be plus and minus one standard deviation. And this is telling me that what statistics suggest for that particular stock is that the stock we trade anywhere between 130 to 162 from today all the way to September 18. So knowing that 162 and 130 are my numbers, let's go ahead and adjust these values to 162 and did I say 130? I think I said 130, right? Yes, I think so. Something like that. So 130 and 162, yes, that's what I see. That's what I said. So more or less, that's where price should go. The current price of that stock is here. Statistics suggest that from now until next Friday, anything could happen, but statistics suggest that whatever happens would happen between 130 and 162. In other words, staying within the dotted lines is likely. Going above or below the dotted lines is unlikely. Okay, going above or below, it's unlikely. So if we were to not only go beyond the dotted lines, but on top of that, we were to hit a UFO, for example, in this case, we have a UFO below, isn't it? So if price was to come below the dotted line, which is unlikely, and hit that UFO, price would be very likely going to come back inside the range. And therefore, if I was to sell options below 120, that would put me in a good situation. Okay, so that's what we're gonna try to do. It's to pick UFOs above and below the dotted lines. Okay, but for the ones of you that are new, you need to know that we have a very important rule that we always follow, which is we need at least two UFOs. So in the bottom part is fine. I got 1 and 2. So I can certainly draw my line there around 120. But on the top part, I got 1, and the second one is so far away. So if I was to draw my line here, and this is now 1 and 2 red UFOs, isn't it? 1 and 2. This is UFO number 2. So the problem I have is that if I draw the vertical distance from here to here, okay, and I was to project this vertical distance to the bottom part, okay, to be more or less in the center of the range, I would need to rely on the UFO above, and the one below should be the 108. Okay, so that's how I would be able to do an unidirectional trade where I am starting more or less in the center of the range being defined by 108 below and 181.99 above. Okay, so that would give me the greatest statistical possibility of remaining in such range. If I was to start very close to the top, or I was to start very close to the bottom, so then forget about the UFOs for a minute, which you never want to do. But for a minute, let's forget about the UFOs. So if you were to suffer price movement against you because of climate change, what happens is that on-field orders may be canceled. And if you are too close to the bottom part or too close to the upper part, you may be wrong on the trade where price goes way past the dotted lines, which is unlikely, but could happen in case we have a very dramatic change of climate. So in order to minimize this possibility to happen, you want to start as close as possible to the midpoint of the range. It doesn't need to be exactly the midpoint, but the nearer to the midpoint, the better. And given the setup I have in my screen, so you saw me placing the lines at 182 and 108. Okay. Now, the problem is going to be, and I'm pretty positive that it's going to be a problem with September 18. The problem is going to be is that the premium we're going to get paid, especially for that 182, is very likely going to be very little amount of premium. Okay, let's take a look at how much we get paid for the 182. First, we don't have 182, we have 185, okay? And the amount of premium we get paid is 45, okay? 45 cents is the amount of premium we get paid, which, to be honest, between us, is more than what I was expecting. Well, we got 72% implied volatility built in on Beyond Meat, so that's really not a joke volatility. Okay, yeah, 72.76. So actually, it's a nice surprise. We get more than what I was expecting, okay? Now, what about the 108? Well, the 108, let me load all the strikes. So for the 108, we get paid 18 cents, okay? And that's not good because this is another rule we have that we use all the time, which is a rule that says that when we sell options, we want to collect at least 35 cents. And 18, it's certainly not 35 cents. So in other words, the September expiration, it's basically too near, okay, given how far the UFOs are. 8 days to expiration don't pay enough. Therefore, we're going to move to September 25 and see what happens, okay? Well, we don't have the 108 now. We have the 105 and the 110. But notice how the 110, for example, would pay you 40 cents. So maybe, okay, we're going to have to check this. Maybe we have a trade. But before I get into checking this, I need to confirm my statistics. Okay, so notice how I went back to the analysis tab. Okay, and by looking at the analysis tab, I am in the process of changing my expiration date one more time from 18th of September to 25 of September. Okay, and when I do that, my statistics are now being recalculated, and now what one standard deviation represents, it's a range between 126 to 170. Okay, so 126 to 170, okay, is going to be all the way there. Okay, and 126 is going to be all the way here. In other words, if I was to use 182 and I was to use 108, I'm still pretty okay. Okay, I'm still pretty okay because those definitions of the range are past the dotted lines, which is what statistics suggest, and then, most importantly, lining up with the UFOs, which, if the market goes crazy, those UFOs may hit the market and bring it back inside the range. And that's why we want to rely on those, isn't it? Cool. So let's go back then. Okay, let's go back to the option chain, and let's see on the upper part, if we use the 182, which probably does not exist, we got 180, 185. So how much we get paid? Okay, you can see here the call side is loaded on premium. Okay, 157, 148. That's good premium. Liquidity is not the best. Okay, 135, 179, and this one is killing me. 108 to 187. Okay, it's like 80 cents of spread out of a $1 option. That is really, really, really hurting me, visually speaking, and is really going to hurt the trade big time. Okay, so I am very tempted to look at this trade in a different way, because that's going to be problematic, especially if you want to exit the trade before the end of the time. Okay, so let me take a look at, unfortunately, the most liquid ones are normally the monthly expiration dates, which are, in this case, September 18 and October 16. And of course, if I use October 16, I should be able to find more liquidity. Okay, so if I look at the 180 here, so the 180 is 450, 475, 370, 405. So it's much more liquid, so much better. Okay, so much better. So much better. But at the same time, I'm just positioning myself to be very, very far out. Okay, so I just want to check the other expiration dates to see what we have available. 178 to 285. Again, another $1 spread. Okay, 9 of October. Wow, my God, 070 to 475, $4 of spread. That would kill you, isn't it? So yeah, so I'm kind of concluding that October 16 is going to be the best bet to be in a good position when it comes to liquidity and spreads and everything else. Really is by far the healthiest option spread. So now, of course, going back to statistics, that's going to change the range dramatically, right? Because moving from 25 of September to 16 of October is almost another 30 days. It's three more weeks that we are adding, 3 or 4 more weeks that we're adding. So when I do that, okay, and by the way, some strikes are not available, so let me re-enter the analyze sell iron condor like this, so it's quicker. So now we are talking about a range which is 185 to 117, so it changes a few things. Okay, so let me go ahead and go back to the chart and readjust everything here. So 185 to 117. Okay, so 185 is here, 117 is here. So notice how this UFO is still okay, but now the UFO above doesn't work. We will need to move to the next one here. Okay, we will need to move to the next one here. Okay, that's where we need to go. And when it comes to the bottom part, so that one will be fine. Okay, so yeah, we are, if I was to project where the current price is and where our final UFO is, and I was to project that to the upper UFO, we are actually pretty well positioned as well. We are more or less in the middle part of the range, isn't it? So I'm fine with this, and therefore let's begin the planning of this trade. with October 16. Okay, so back to the chart, and I see your question, Fairmont. Let me keep progressing a bit more with this trade, and then I'll get back to you. So we are talking about the 190 and the 110. Okay, so 190 and 110. So the 110 is providing 154. That is certainly more than 35, and the 190 is providing 338, which is also fine. Okay, so the only downside of this trade is that if you look at the 190, 195, or you look at the 110, 105, in both cases, strike price increments are $5. Okay, so in other words, this trade will carry a risk of $500, and there is no way I can make that smaller. So if you are in earlier stages of your practice and that's too much, then you're going to have to use paper money to do the trade. If you're a bit more advanced and you're okay with $500 of risk, then you can execute this live. But it's not like other stocks or other expirations, like, for example, going back to September 18. Okay, I got strike price increments of $1 at a time. So I could have made the risk of the trade less. I had to go all the way to October 16, and unfortunately, the strike price increments that are given by the exchange is $5 at a time. It's a distance of $5 at a time, and therefore I cannot change that. So that's the disadvantage. That's the problem I have. Okay, so let's go ahead and input the trade. So we're gonna do 195, 190. So let me enter all of this here, and then I will write it on the chart so everybody follows. And then we're gonna do 110 and 105. Okay. 110 and 105. Okay, and we are almost there. Almost there for this trade to be validated. Okay, so anyway, before anything, let me be a bit more visual for the ones of you that are not used to trade options yet. So we are doing an Iron Condor starting today all the way to October 16. I need to add just a few more candles there so I can move my line to end of October 16, which is right there. Okay, so basically our bet is that starting from today until that vertical line on the right, which is October 16, we're expecting the price of the stock to stay in that purple area. Okay, and in order to profit from that setup, what we're doing is that we are establishing an Iron Condor where we're going to be buying, okay, the 195 call. Okay, we're going to be selling the 190 call below. Okay, all of this is using expiration October 16, 2020, while earnings are reported as of now. And by the way, this is a date that changes. Okay, so careful with that. Earnings are currently reported as being October 26, 2020. Therefore, I'm fine. Okay, but again, you need to keep monitoring those earnings because they could change. And you want to make sure you don't get surprised by that, and then you get a gap against you in the middle of the trade. Okay, so make sure you're going to be monitoring those earning dates if you're going to take this trade. Okay, and then on the bottom part, we're going to be selling the 110 put. Okay, and we're going to be buying the one below, which is the 105 put. Okay, so this is the trade that we are putting together. So hopefully this writing helps to fully understand the trade. Okay. Cool. Furman, I'll be back to you on your question in just a sec, okay? Cool. So now, do we accept this trade or we don't? Well, as of now, I would say yes. Okay, why? Because if I freeze the screen, what you can see is the midpoint. Okay, the premium to be collected is 88 cents. And why is that a yes? Well, because the risk of the trade is $5. Okay, the risk of the trade is $5. And the rule that we use is that given our raw risk, okay, given our raw risk, which is $5, okay, so our rule is trade is okay if premium is at least 15% of raw risk. Okay, that's the rule. So how much is 15% of 5? Where 15% of 5 is $75. Okay, and currently it shows us the midpoint being 85. Now, careful, The bid is 145, the ask is 31. So if you do this trade at market, you will get paid $31. So please, 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 no one does this trade at market because you're gonna leave so much money on the table. That would be absolutely crazy. Okay, so don't do it. Beyond Meat seems to be an okay trade, but it is not the most liquid stock in the market. Okay, so please, please, please keep that in mind. Don't do this trade at market. Okay, but if you were to shoot for 75 cents, you do a limit order, you start with 88. Okay, and you wait 5 minutes, and if you don't get filled, you change it to 85, and you wait 5 minutes, you don't get filled, you change it to 80, and as long as you get filled at 75 or more, then it's fine because the premium collected exceeds our rule for the raw risk. Okay, right now it's showing 91 as the midpoint, but careful, earlier it showed 72. Okay, so this is gonna be fluctuating. Now it's 94, so it's looking good, but again, you never know. Okay, so I'm gonna pretend that I got 75. Okay, so I'm just gonna set this value there. So I'm gonna pretend I got 75. So then we can monitor this trade. But certainly, if you wanted to take this trade, you would just want to click trade, and when you come here, again, pick the midpoint. Maybe you can start with 90. Okay, and see if you get filled, and then wait and change the price a little bit, but certainly never less than 75, because if not, this trade would not be justified. Okay, it seems that a little bit of additional premium is kicking in. It's pointing at 96 now. It was 72 a minute ago, so you may want to take advantage of this increasing premium, probably increasing volatility on the options, or also a bit better liquidity at this time of the day. That may allow you to get in at that price. Okay. Cool. So we have it. This is trade number one of the day. Let me add Beyond Meat to our list so we can go ahead and review all of this. Okay. And before I take care of Furman question, there is one last comment I would like to make. Apart from asking you if you have any question, please, this is the time to type, because I'm going to change to a different stock in a second. So if you have any question about this trade, or there is something you would like me to re-explain or something, please type it now so I can read you. And while you do that, I want to go back to this section on my Option Station Pro, which is the Manage tab. Remember, we talked about the concept of running multiple trades in parallel with stocks, building a portfolio. So again, let's say you already got this trade with SPG, which is non-directional, and let's say you have another trade, or maybe two more that are non-directional. Well, then you may not want to take this trade with Beyond Meat because you already have too many non-directional trades in your portfolio. If the market was to crash, like it happened in February, March earlier this year, so then those non-directional trades may get hurt. So you want to have a mix of directional long, directional short, and non-directional to have a proper offset in your account. Okay, so again, you need to have a plan, you need to have your risk management rules and specific rules when it comes to how many trades you execute at the same time, which are non-directional. Every time I conduct the sessions, my assumption is whatever trade I plan, you guys need it, so you can go ahead and execute. But beyond my assumption, because we are all different and I don't know exactly what you have in your accounts, guys. So putting on the side my assumption, you guys need to give it a go or no go, depending on what other trades you have running in your accounts right now. Okay, so hopefully this is well understood, and I see no questions. Therefore, I'm gonna go ahead and answer Furman question. Cool. So Furman, you said, how did you get the earnings info to show up on the chart analysis? What study is that? Okay. Well, this is a new study available in TradeStation. Okay, but to be honest, I don't remember the URL by heart to get it. So if you don't mind, I would like you to send an email to our support team and they will respond to you, because again, I don't remember by heart. So I will need to do the research. So that would be support@tradewithufos.com, and ask for the direct URL to get that indicator, and we'll send it to you. Okay, it's a free tool. Okay, so you can get it on your TradeStation, no problem. Okay, and this is, by the way, this is a very, very new feature available in TradeStation since just a few days ago. Okay, so it's brand new. Good eye, Furman. I love how observant you are. Very nice. Cool. Okay, so let's continue, guys. I'm gonna take a sip of water if you don't mind. Okay, so let's continue. What else do we have? Okay, so let's continue here. Okay, I'm just looking at the list of stocks here. Now, notice how when it comes to when it comes to directional trades to the downside, notice how the scanner gave me nothing. I got no opportunities. Okay, and why is that? Well, because the market crashed very, very hard, and most of those stocks are in a position where, while the impulse that we had on Friday and Tuesday was clear to the downside, right now, given the current market conditions, nothing is being identified as healthy to be shorted. Okay, so if you were short already since before Friday, great. Right now, it's not exactly the right time. So now I do run the scanners before the market opens, so I'm rerunning it just in case some other trade is going to show up now that the market started moving. And if that's the case, we may have a trade to plan. Okay. Also, notice how a little bit of a similar situation happened when I look at my directional trades to the upside. Okay, while we had very, very strong movements. Okay, notice how very few opportunities show here. Okay, and so why is it? Okay, why is it? Well, one reason why we have very few opportunities to the downside I just explained, but why is it that we also have very few opportunities to the upside? Well, apart from the reason I just gave you, there is another reason, which has to do with the prices of the options themselves. So, because the markets behave crazy, uh, options became overpriced, and since our scanners for directional opportunities are to build debit strategies, and debit strategies means that you buy options, and currently options are very expensive. So what's happening? Well, basically what's happening is that the scanner is telling you no go, no go, no go, and only very, very, very few opportunities are available for you to purchase options on them. Okay, and yeah, so basically it's either you had a portfolio and you had trade running and you benefited from the moves that took place, or you didn't. And now entering now is going to be difficult unless the market cool down. Maybe we'll have a little bit of a couple more days where the market is slow, the VIX comes down, the prices of the options cool down as well, and now we're going to see many more opportunities show up. But right now, really, it's the time to collect premium more than being directional, because the premiums are overpriced, or options are overpriced, and therefore the level of premiums in current times are not ideal for you to buy options. Okay, you can certainly go the route of doing strategies such as butterflies and things like that that will still allow you to enter when premiums are high. But those are strategies that use 4 options at a time, and then you have to pay much more commissions, and you get much more slippage unless you use extremely liquid markets. So again, it's not ideal. And with that philosophy of keeping things simple, the scanner is doing a very good job at showing us very few opportunities. Okay, so I'll click on them. Okay, so that particular stock, CrowdStrike Holdings, it's providing 47% probability. That is not good enough with pre and post market. With regular session is providing 56%, and that is indeed good enough. But unfortunately, while the climate is telling us good to go, it's confirmed and up. Okay, the problem is that the reference value, it's 127.45. And that reference value does not have any UFO lining up at this price. The next UFO we have is 112. Okay, so no possibility to join the move as of now. Okay, so we're gonna have to wait on this trade, and anytime a UFO may form here around 127, but as of now, it hasn't happened yet. Okay, so we're gonna have to wait. PRNB. So this is an opportunity we want to pass, in the sense that statistics are showing us a climate that has propagated for 20 candles, where statistics would suggest that 6.30 would be the normal thing to expect, meaning that 20 is absolutely not a normal thing, and therefore anything that is totally unpredictable could happen to that stock, and therefore trading it is basically a gamble. Okay, so we're gonna move to Williams companies and see what's happening there. And actually, we are not gonna touch it, okay, because while at the beginning, before the market opened, this is a stock that we were planning to enter. Okay, and yeah, actually, this is a trade that we had before, and as you can see, so this trade did what it had to do, and so on. Um, so don't be confused with all those drawings because they belong to a different trade. So with WNB, the problem that we have right now is that with the 3% drop, okay, that is happening as the market is 0.26% up right now. So that stock is down by 3%. And basically, what this has impacted is the climate to now move from confirmed when I run the scan before the market open to now unconfirmed, as you can see, with the thin dot. Okay, it's not thick like this one anymore. Now it's thin. Okay, and that means that we should not be in this trade unless we get evidence that the climate will confirm again. So even though I got three symbols on my list, nothing is to be traded. Okay, and the directional list to the short side still reported nothing after I had rerun the scanner. Okay, so again, uh, I'm showing you all of these guys because you need to know what to expect. While as traders, we are ready to embrace any trade as long as the trade meets our rules. As traders, we also know we also need to know what to expect, so we don't become disappointed by the market because the feel of disappointment would often lead to things such as trading in revenge mode or just avoiding trading for a while and things like that. So it's important that you realize that in days following very violent movements like what happened a few days ago in the market, it is quite normal that the directional opportunities are gone. Why? Because if you were on them, great. If you were not, you are late to the party. The moves already happened. So it's fair enough that the opportunities are gone. And on top of that, options prices went too high. So when you see the scanner reporting you with very few or no opportunities, should be okay with that because it's a normal thing to happen. That's what I mean by knowing what to expect. Okay. On the other hand, we do have non-directional opportunities. Okay, we just found one on Beyond Meat that is providing the correct level of premium for us to accept the trade, and there are more symbols, which given the time, which is the time to conclude our session today, so I would say that all of those other symbols will be good exercises for you to go ahead and do the homework and plan those iron condor or any other type of non-directional trades. It could be iron butterflies or any other combination of strategies that you may know about options that would help you benefit from a ranging market, and you can go ahead and do that following the same process I did myself. Okay, cool. So basically we are then reaching the end of the session, guys. Can I get little confirmation then from you guys? How is it going? How is it going so far? How is trading in general? How has it been in those past weeks? Are you in learning stages and you were not trading, but you saw the moves? Are you trading and therefore, were you able to capitalize on those moves or you didn't? Was it exciting? Was it scary? Have you ever seen moves like that before? Are you newer to the market? Are you more experienced and you've seen that before and that excites you? Share a little bit with me, guys. Again, I'd love to know more about you and in general how things are going, both with me in the sessions here, but also when the sessions are over and you're doing your trading yourself. I'd love to know a bit more about you guys, so that way I know how to better conduct the sessions that we do to help you better. Okay, Mark, good. I'm invested as much as I am comfortable with. Got you. That's very good. I like what you said there, Mark, because that means that you thought about what that number is and why, and therefore, you are okay with it. So it's not like when the market moves against you, now you lose more than what you're comfortable with, or vice versa. When the market is moving your way, now you make so much money that you get all euphoric. So we wanna manage all of that. Okay. Cool. So, guys, you seem to be very, very quiet. I know my question was a bit personal, and therefore, maybe typing it in the YouTube chat box is not something you are comfortable with. So, I somehow would understand that, even though, let's face it, we've been 45 minutes into the session. Only people like us, trader junkies, are going to be watching a 45-minute video all the way to the end. So the people that may read your comments are people that take trading just as serious as you guys. So no worries about typing on the chat box, okay? I may be a little too invested. Okay, I got you. So again, Mark, you have to define it. Okay, you have to define it, and you have to write it down, and you may have to discuss it with a good friend, with your partner, with someone, so that someone will keep you accountable on those values. Again, those are emotional times in the market, especially Mark, you've been in the markets for a while, so you've seen things, and great could kick in times like that. Fear could kick in times like this. So again, having someone close by that keeps you accountable is certainly a good thing to have. Okay. Fairmont, thanks. Everything good. Did well. Was not caught off guard during the drop. Thanks to you. Thank you very much for saying that. I'm very happy. Mark, I am working on my trade plan. Got it. Perfect. Way to go. Way to go. Yeah. We need those plans. We need those rules, guys. That's absolutely critical. Great. Everybody, as always, my pleasure to join you here for our weekly session. I guess you are all aware that we run many more sessions, isn't it? We do the nailing effect sessions as well. By the way, just for you to know, in case you don't, YouTube has recently changed how they do notifications. Okay, in the old times, we would start a live sessions and you will get emails sent to you automatically by YouTube, not even by us, by YouTube actually. All of this, it's not done any longer. So we have done a few improvements in certain places on how we communicate with you guys, so you don't miss the sessions that we do. Okay, so very briefly, I would like to bring you to our get together calendar, which probably you know very well, and I would like you to realize that if you pick any session, okay, and you click on it, okay, then you have a special link, okay, right there, that you can click on it, and that will allow you to add to your calendar, either Apple, Google, Office, or whatever, the sessions that we do, so that way you are properly alerted by your own calendar and you don't miss the sessions live. Okay, and then of course we send you the recordings, but certainly live sessions give you the opportunity to ask questions real time and so on. Okay, and by the way, we send every Friday an email. Okay, every Friday we send an email that looks like this. Let me show you the one from the last Friday. Let me see. The one from the last Friday. Here we go. So it looks like this. Okay. So this is an email, right? Where you have a collection of buttons there. And again, when you receive that email and you see all those buttons, which are the sessions for the week, again, same story. If you click on any of those buttons, okay, it's going to bring you to the same place where you can add your sessions to the calendar. Okay, so make sure that when you receive those emails, you get organized, you add the sessions to the calendar so you don't miss it and you're well organized. And by the way, if you don't receive those emails, it's because you never sign up for the Trade with UFO membership, which is free. So you should. Okay, so come to the join page. Okay, and under members, you got the Trade with UFO membership. So click agree and join and sign up for this membership. Is free. Again, there is nothing to be done. Just type your data, your name, email, all of this, and basically this will automatically add you to our emailing list, and therefore you'll receive all this information. Okay, that's it, my friends. We are done. You know what? Let me comment one last thing as well, since we are here, which is relevant because the dates are very, very close right now. Looking at the calendar one more time, you may notice that there is a Forex class as well as a futures class that we're going to be running at the end of the month. Okay, so specifically for the Forex class, for the ones of you that are into Forex or want to learn Forex, there is a special thing in here, which is your live online class. So we have launched recently something that we call the to be determined dates. Okay, so if you want to join the class on 21/25, that's $233. But if you're not in a rush and you are okay with us to assign you to any other future date, so you can also pick the discounted to be determined date. Okay, and then basically your 233 class becomes 89 for the ones of you that are not in a rush to take a forex class, but you wanna get let's call it a better deal for it, in the context of what we do. Okay, so yeah, so I would say that's all, guys. Again, important about the scheduling tool, as I have discussed earlier, so you don't miss the sessions, given the fact that YouTube is not sending notifications any longer via email. Okay, guys, everybody, you take care, my friends. I will see you soon. Keep up the good work, and be open your eyes out there. The markets are spicy. There's money to be made, but there is risk as well. Okay, so make sure that you are well positioned and you manage your risk at all times. Don't improvise. Follow rules. And if you don't have rules, just wait to trade until you have rules. Okay, but make sure that you are doing things in a proper way. Everybody, take care. Everybody, see you soon. Bye bye.